All right, hey everybody, how's it going out there? My name is Ben McDowell with TradersCoach.com. Great to have you here on this December 4th, 2024. Hope everybody's doing good. All right, so Faye, how are you? Faye, Gina's on the phone right now and she's not here, but I will pass on your message to her and I'm sure she'd say hi as well. All right, so hopefully you can hear me okay and see my screen. Let me know if you cannot. All right, and then we'll make some adjustments because I'm always the last one to know. We're going to talk about targets today, trading targets. So I do want to cover that a little bit on that, of course, if any questions as well. And Jerry, how are you? Nice to have you here. We have a really good turnout today. So if I don't get to your question right away, I certainly will get there, okay? All right, let me go through the fun administrational items here. And that includes our risk disclaimer. And like basically the bottom line with risk is there's risk in trading the markets, whether you're investing or whatever. But like I always say, without that risk, there is no opportunity. So the two really go hand in hand. Just need to be aware of the risks. You need to be aware that they're there. Past performance doesn't guarantee future performance. And we want to protect ourselves by trading with money we can afford to risk, called risk capital, and also using stops on each and every trade, and calculating your stops through position sizing. So that kind of thing. You know, the interesting thing about risk and fear in the market is, you know, you have your fear and you have your FOMO, which is fear of missing out, which is kind of a greed part of fear. But the bottom line with fear is usually people that are fearful or feel fearful for the reason that they have too much trade size on a trade. In other words, their position size is too high, and therefore they really aren't comfortable with leaving that kind of quantity in the market. And even though they have a stop set, it's a little bit too much for them. So lower the trade size if you're ever feeling that way. That's the easiest way to solve that problem. And the other thing that people have trouble with is confidence. So if you feel like you don't have confidence in your trading approach, you probably don't. And so the best thing to do is stop trading, get that system refined and tested to where your confidence level is okay to begin actually trading with real money. So I think with risk control, those are the things that I think are important. You always have to use a stop. And you know, the funny thing is, kind of a fun thing to do with stops is on a simulator account, grab a simulator account and see what happens when you're in a trend. And let's say you start going against the trend. So let's say the trend is up and you take a short position. All right, the trend keeps going up. All right, you take another short position. So this is called DCA, dollar cost averaging. And when you don't have any fear, you can just keep doing this and doing this and doing this. And guess what happens? You get to the end of the trend, you have a huge position size, it reverses, and you make a ton of money. You almost can never lose if you could do that with enough funds that you could keep doing that and keeping your trade size small enough that you never panic on keep adding those positions in. Now, I'm not saying that's an effective way of trading, but I'm just saying it proves the point. When you have no fear, you can trade the markets a lot differently than when you have fear. And it's a fun thing to try, but do it in a simulation account, okay? Don't do it with your real money. I do know some traders that do that. They're pretty well off. They'll have literally a trading account, $500,000, but they'll do it on a small trading size. And some do it intraday, others do it end of day. The intraday is a little tricky because if the trend does not reverse in one day, then of course, you know, you can't get the advantage of the reversal. But usually if you do it on longer time frames, it works better, but it is still not for everybody. But you have to do it with money you don't mind having that kind of drawdown with. But it's kind of a fun little simulation to do. So I definitely check that out. All right, now, for those of you that are into day trading, I always like to bring this up on the client support. Apex Trader Funding is a prop firm where they give you data for futures trading, which is a big plus. and basically it's included in one of their low fee subscription evaluation accounts. They have a lot of percentage off. I'm going to put this link up here in the chat area if you're interested in taking advantage of that. We're an affiliate member of Apex. What else can I tell you? I use it. I have a bunch of PA accounts, funded accounts that I got through successfully passing evaluation accounts. And I find it's a great way to go. All right, so you just got to work within their rules and so forth. Something like dollar cost averaging you could not do really with a prop firm account. The rules would keep you from doing that. You have to pretty much do that on your personal accounts. But nonetheless, it is there for the taking. And I got to tell you, even if you don't want to trade, day trade, but you want the intraday data on the futures market, it's cheap. Okay, you can use our coupon and get a cheap subscription and then get the data. And the data would be cheaper than having to pay for it. So I always like to bring that up in case that interests people. All right, big announcement, the Art of Trading second edition. We heard from Wiley Publishing, and the release date on that is January 9th. So it's just a little over a month away. You can pre-order that now. We'll put some links up in the recording, or you can just go to our website, go under books, under education and under books, and it will take you right to our Amazon page where you can order that. 608 pages is the final page count on that. And it's going to have some accompanying materials located on a specialized website for additional material. Originally, when I wrote the book, it was over 800 pages. So some of that material we put on a website because the book was getting so big. So a lot of material in that. And I think it's the best book I've written to date. Okay, so you can check that out when you're ready. And of course, software. I recommend the ART software along with the OWL, PTF, TLM, and ERI indicators, scanners, and risk control software. All right, let me come out of here and go into some things here. Here's Bitcoin, by the way. This happens to be on TradingView. We get our crypto data a lot on TradingView. We used to get NinjaTrader, but for some reason, Coinbase does not connect to NinjaTrader anymore. So without causing some type of crash, we sent the support people at NinjaTrader an email on it. So hopefully they'll get that kind of tuned out. If it works for somebody now, let me know as well. But also too, if you're interested in getting Coinbase data, which is free data for the cryptos onto your NinjaTrader, and you cannot, like I cannot, I would send them an email. The more emails you hear from people, the better. You know, when Ninja used to first came out, we were the second, I believe the second vendor that programmed for NinjaTrader. And I used to know, what was his name? I think Roy or somebody who owned it, who first started it. I'm going back probably 20 years ago now. But when Ninja first came out, we were about the only outside vendor that programmed for it. And like I said, number two, maybe number three, I can't remember exactly, but one of those. So we knew all the owners of it, okay? And we used to do a lot of their presentations, you know, when they'd set up a booth at the trade shows and stuff back then, the Traders Expos, stuff like that. So, you know, it's really good, but now it's gotten so big, all right? There's only a few people left there that we really know. And there's literally hundreds, if not thousands of people that are programmed for Ninja now. So we're pretty much a number in the in the wheel spoke, so to speak. We're a spoke in the wheel, and we don't have the same weight we used to. So in terms of responding or sending them an email, we pretty much are generically get the generic emails back now. But you may want to help us out there by sending them an email so they hear from more people. That is always helpful. All right, so on Bitcoin, real quick, one of the things, and this we can kind of tie in with trading targets. You know, with trading targets, there's actually a couple different kinds, obviously, but there's two different major approaches for trading targets. One is we use it basically to take profit. So when we talk about a target zone, we're looking for the market to go to a certain area where we can take profits. The other target zone is one that gives us an entry opportunity. So it's kind of like a target zone based on maybe a trend that has finished, so we can get ready to trade in the opposite direction. So the target zone for that trend, let's say it's a downtrend, we can kind of spot when that's over and then trade back to the upside. So we can use targets, trading targets for entries and exits depending on what we're really looking at and what the market. The reason I bring it up now is if we look at Bitcoin here, and this is the actual coin chart, notice we had this candle way down here. The volume was really high here, okay? And this is a target for a bottom, okay? So when you see something like that, what you're really looking at here, let me just see if I can open this up a little bit bigger so you can kind of focus on what I'm saying. Because it's not only for Bitcoin or cryptos, it's any market and any time frame. We look for these when we day trade the NASDAQ. Oh, by the way, did anybody trade the NASDAQ today? It was one heck of a market. You know, it kept going up, 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 new highs again. But if you were day trading it and you tried to take a short position against that trend, you did not profit today. It was very little pullbacks. And really, I've noticed I put a position on last night, I'd say about 10 o'clock p.m. and it was a day trade, but I left it on all night, just put my stop in place because that trend was just going. I woke up this morning and it was still in place. I didn't close it until right around 1 o'clock when the market closed my time. So that thing just, that was the weirdest day trade I think I've ever taken because it was one trade up. All right, so kind of interesting, but you get those some days, of course. But in terms of Bitcoin here, when you see a price bar, regardless of the time frame, but here's a daily chart on Bitcoin here, and prices then get above it, that is a important bottom of some type. And when you look at it compared to what they're doing from a more of an institutional standpoint, what happens is the trend is up here, right? Then it drifts this way and it starts taking out stops because what markets in general, whether you want to blame this on the institutions or just the workings of the way the market works, is that it goes up, it pauses, it goes up, there's profit taking and so forth. And the point with some of this profit taking is it just can't go up forever, right? So what happens is it gets to a point, people say it's high enough, I'm gonna get out. And then there is some manipulation that can go on during periods where the market is kind of indecisive because the volume is a little bit weird here. And so what I do is I look for key levels of areas on the trend up for people to have put their stops at if they were bullish. And so when you look at a market like this, you kind of think, well, you know, if you don't have the right side of the chart for right now and you just have here, all right, you know people are long that stock, all right? They're not short, they're long, all right? Now, when you start to get a little bit of a break, all right, then, all right, people will stay long until their stop is hit or a level is hit that they want to exit, because then at that point, they either want to take the profits they have or they're worried about a big trend reversal. And so you can spot these points on the way up, and they're the bottoms of the pullbacks. And if you think about this from the fact of how an institution works, an institution, when they trade, wants really to grab liquidity. So what it looks for is where that liquidity is going to be in the form of stops and maybe people actually executing orders in the direction of the possible new trend. So there's a lot of positions sitting down there. And so they want to grab it. And so in a big uptrend like this, there's liquidity here, here, and here. And what happens is the market usually can take out these little points and then reverse. And that's what we saw here. We had a reversal up here, formed another liquidity point, came down, all right, reversed back up when it hit this, came down again, and then look here. It went and took this liquidity out right there, and then it bounced up. Now this, to me, was a major point. Why? Because it's a big order block. Whenever you see sideways prices like this before a big move up, that's an order block. That's where institutions previously were accumulating before the big push. So usually what happens is price, it acts like a magnet, and prices usually go back to that order block. The institutions see it as value again because they think value is here, and then they drive it back up. So they wait for prices to come down, and they grab the liquidity sitting under here as a possible stop, and then buy. And that's why you see this big candle forming here, all right, with a long wick. And then at that particular point, that's usually a manipulation followed by an expansion. And at that particular point, you can also usually find fair value gaps. And that is an excellent time to enter, or you can wait for the pullback back into this area here, into the order block area of this move, and then buy again for the next move up. That is what we do a lot when we day trade as well. And then you can use the pyramids going forward all the way up. But when we talk about targets, this is a great target to look for, not for profit taking, not unless you're going down here, but also for a chance to join the trend again on the way up. Okay, so that's kind of that type of thing. So to keep that in mind, when we talk about targets, not only for profit taking, but also for getting into trades as well. All right, so the other thing we look for in targets is we use Fibonacci like we have here. But let me just go to another chart here, kind of like what we have here on GBTC. This is where you can see our indicators again here. So on GBTC, we're starting to hit the target, longer term target up here. But as of now, you can't look at this and say that we have a reversal yet. We're still moving up. And another great way of deciding on a target is just simply taking a trend line, all right? Run a medium-sized trend line, and then run a short-term trend line. And you could use that as a quick target to get out, or at least scale out on some of your positions if that particular trend line after a big move up like this fails. All right, I always wait for prices to close under it, not just touch it. The other target, of course, is our fibs, and you've seen me do that many a time. And this would be a fib level here. So this would be our target. Now, this would have been our target when we went into the trade, along with the PTF down here, because that's another target type of thing. But what you want to do with fibs is when you hit the Fibonacci target zone, don't sell out. All right, an example like this. Instead, at this particular point, use your trend lines over here. And so if you get a break in that, sell out some, but look at the indicators below here. And if you see a situation where you still have a green here, green here, green here, green here, then you probably want to stay with that position even though it's in the target zone, right? So you can certainly do that, and you can wait for the next pyramid. But you could also take off or scale out some on a pyramid here when this forms, or use a trend line. All right, so a lot of trading is this nuance of combining time frames and also looking at the indicators to see if what they are saying would keep you in a trade or not. All right, so keep that in mind. So specific target zones, not necessarily fibs now, specific target zones would be the PTF, okay, that would be a specific target zone. and also looking for liquidity levels that the market may want to take out, okay? So that would be also something we look at. All right, now, when we have the pyramid trading points and we enter a trend, we really don't know, for example, where the target is based on the pyramids. The pyramid's job is not to tell us what the target is. The pyramid's job is to take a look at price action. And if it's a trend developing, give you entries and where to put your stops based on trailing stops using the pyramids. Now, there's sometimes when we use the pyramids, we may not use the closest pyramid. We may use one a little further back, depending on how much room we want to give the market, and that's going to depend on maybe what our indicators at the bottom are telling us as well, okay? So there's a lot of nuance in how you combine the information that the market is telling us and also the information that the software is telling us. So I think that's equally as important as well. All right, if you have any questions on this, feel free to ask, okay? But as a recap on target zones, so when we talk about target zones, specifically, PTF is a great tool. Let me just show you Tesla, for example, to bring that home. All right, so if we look at this Tesla stock, this is one that hit our target, right? Okay, this is one that has been a real good trade. We got a green PTF, but we're in the target zone. So we also have pyramids forming up here. So here's another great example. All right, I've drawn a red line on this weekly chart for the PTF right here, okay? So that's where we think the market's going based off the PTF. So even though we're in the target zone, if we don't mind making this a longer term hold, we could hold it up until the 419 area, okay, which is the PTF. Now, what are the drawbacks of doing that? Well, all right, we've had a very sharp move up, so it's very possible for this thing to correct even back into the upper 200s before it turns around and goes. And that may cause you concern, okay? You may not want to do that, but you may not want to leave the trade either. So you could certainly stay with the trade and go to a lower time frame over here and assess where your stop should be based on the pyramids here. So it's got a stop right here, which would basically take you out of the market if it got around what, 305? That price is, let me just see, check here. So that price, I've got the data window on another monitor here. So that's 309, 309.22. So, okay, so there's a situation where you could use that stop if you didn't want to hold it back for a more major pull-off. Another perhaps type of thing you could do is take a trend line, make it real tight if you want, one there, okay? And you could either see how another one works. You could go a little lower here, all right? And you could use those as an exiting situation and maybe just a scaling out, all right? So you could do it that way. And then once prices get to the PTF eventually, then you can have your stops real tight on that as well. And if you notice here on the owl, again, it's assessing all the information. So on the owl here, we've got a wave 3, which is this wave 3 inside a major 5, right? That's the way it looks so far, okay? Things could change, but that's the way it looks so far. So that makes sense to kind of hold it, but it also makes sense that we could have some type of pullback. So there's, you know, many different ways in which you can manage the trade using targets for knowing where price is going to go. Because don't forget, again, like I said earlier, the pyramids are not going to tell you that. The pyramids are just going to tell you whether you should be long or short, but it's not going to tell you how long that trend is going to go on for. And, you know, that's what targets are for. Okay, any questions on that? because I get asked that a lot. I get asked on how to basically determine targets since the pyramids aren't doing that. And that's another reason why we actually added a couple of these indicators like the PTF to help us with that, because that way not only do you have the pyramids to keep you in the trend, but you also have the PTF for the possible target at the end of that trend. And that's if the PTF is either green or red. Yellow, it's neutral. Okay, so that's kind of a good one to follow. Let's see what else we can look up here. Anybody want to give me a stock or an ETF? I'll be glad to look that up and we can take a look at targets on that. I've got a market review webinar on YouTube. I got to do pretty much right at, what is that one? 4:30, I guess. So I got to wrap this up in a few minutes. Any questions before I go? Okay. And again, if you have one you want me to quickly look up, we can do that together. Going once, going twice. All right, here's one. Okay. Okay, gold. Got gold. Here's another one here. All right. So gold is kind of an interesting situation here. All right. I don't have the targets on this one, but we've hit the target for a wave 5 in gold. So this was a 3, this was a 4, and this is actually at this particular point wave 5. All right, so maybe 3, 4, 5. But this is saying 3 here, but it only goes back here. So I imagine if we extended it, that would be your 3. This is 3. I think this we're probably in 5 of 5, pretty close to some form of a pretty good sized top here in gold. Could go further. We still got a lot of green down there, but it's getting up there. All right, so you know, in a case like situation like this, it's kind of like all the markets right now. They're all straight up making new highs. So is gold, which is kind of interesting because usually gold has more of an inverse relationship to stocks. So it's kind of an interesting situation. Is it's very tough to buy highs like this, and I wouldn't do it. Okay, personally, I don't like to get in late on moves. Much better to have gotten in after this wave 4 occurred back in you know, around 2018. Okay, that would have been a better trade back then after the 2011 high, right in this area here. And you can see also too, when you get into an area like that, that makes sense for a wave 4, there's a lot of back and forth movement where people could be accumulating shares of gold as an ETF or the actual bars itself. So that would be a good place to accumulate in anticipation of the next move out. And then you can just wait for a breakout. Okay, that's what I would, you know, would recommend doing on stocks that are bracketed like that. All right, so I'm going to wrap it up there because I do have to run off to another webinar, but it's great to have everybody here. I did record this. We'll put the recording on YouTube. All right, Cliff, good to see you here. How are you? All right, always great. Hope everything's working out good there for you. Faye, good to have you here as well. And we got quite a few people here, so good turnout today. Jerry, I think you might be the farthest one away. You're away over there in Australia, so there you have it. All right, very good. Out of curiosity, did anybody trade the NASDAQ today, short term? Crazy day, right? Crazy good if you're long. Short traders didn't like it too much. Okay. All right, Jerry's saying, looks like the new book will be available on OZ. What's OZ? That's like a lot of the kids today, when they get pissed off, they use tilted, the word tilted. So I got to get up on the latest lingo, but I don't know what OZ is. The end of the yellow brick road, right? Oz will be available in Oz. All right. Okay, well, that's a good thing. All right, it's certainly supposed to be available worldwide, so I can't imagine it wouldn't be available in your neck of the woods there. All right, well, listen, I can't run over today. Listen, sorry, but I'll be back next week. So any questions you have, just, bring them each and every week. That's the purpose of client support. And I always try to cover a topic. And if you have a specific topic you want me to cover, just always email me, okay? All right, guys and gals, gotta go. You have a good one, okay? All right, hopefully, Jerry, that will be available. Okay. All right, good. I think you're all set now. All right, guys, see you later. Thanks so much, everybody. Bye-bye.